Ladies and gentlemen, good day and welcome to the Multi-Commodity Exchange of India Limited Q2 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. On the call, we have Mr. P.S. Reddy, MD and CEO, Mr. Manoj Jain, Chief Operating Officer, Mr. Satyajit Bolar, Chief Financial Officer, Mr. Praveen DG, Head, Chief Risk Officer. I now hand the conference over to Mr. P.S. Reddy. Thank you, and over to you, sir.
Yeah. Thank you, Mr. Hello. Thank you, Mr. Faizan. Are you able to hear me?
Yes, sir, you're audible.
Okay. Yeah. Thank you for the introduction. I think this quarter, thanks to options, we have done well. I must accept that. And although there's a small dip in the volumes of the futures, the options have picked up substantially well, and hope that we will be able to do better in the coming quarters. And maybe when we introduce more and more contracts also, that should help us to meet our expectations. I think I leave the floor open for question answers. Please ask the people to ask questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Yeah. Good evening, sir. Congratulations on a very, very good quarter and excellent set of numbers. So our first question is on the delivery from TCS. Where are we right now? And are you confident?
Mr. Kumar, the audio is breaking from your line, sir.
Is it better now? Can I just... Hello? Am I audible?
Yes, sir. Please proceed.
The question is on the delivery platform of TCS. Where are we?
Sorry to interrupt you, Mr. Kumar. The audio is still breaking from your line. Request you to please be in a network area.
Sure. I'll get back in the queue. Sorry.
Thank you. We'll take the next question from the line of Devesh Agarwal from IIFL. Please go ahead.
Good afternoon, sir, and congratulations on good set of numbers. 2 questions from my side. Firstly, wanted to know the status on the transition to the new platform. So where are we on that?
Yeah, what is the next question?
And the second question is, sir, we know that you have extended the contract with 63 Moons for a quarter. So what are the commercials around this for the extension of the contract with 63 Moons?
Okay. As far as TCS platform is concerned, we have already started the what they call UAT, and we are planning to launch next month the mock as well as the parallel runs. And so hopefully, and that's what our plan is, that is what our desire is. By the end of this quarter, we should be able to go live, is what our expectation is. As regards to the spent on the 63 Moons, I don't think we'll be able to reveal the commercials, but it is exorbitant. That's all I can say.
Okay, sir. And in terms of, sir, the new additions to the platform, be it your changes in the monthly option gold contracts that you were planning to do, as well as a gold spot exchange, all of this will be post the transition to the new platform.
Absolutely right. Absolutely right. So all of this will be post go live. That's right. The impact of the extension will be felt in the next quarter, of course. That's obviously.
Understood. Okay, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Avinash Singh from Emkay Global. Please go ahead.
Yeah, hi. Good evening. Two questions from my end. Firstly, if you can give some a breakup of the operating revenue in terms of transaction charges on futures and option and other fee and related income. So if some further breakup of this operating revenue. That's number one. Number two is if we see closely, I mean, a large part of growth has been driven by a huge surge in options in energy, gas and crude. Now, how do you see this? I mean, how much of that is kind of structural in nature, or how much of it can be attributed to maybe increased volatility around energy in this amid this geopolitical developments? So these are my two questions. Thank you.
Okay. I will answer the second question first. In fact, volatility is the thing which runs any contract for that matter. Now, whether sometimes it is the energy product, sometimes it is the gold, silver, and still sometimes maybe metals. So I can't say that whether there is any structural weakness or a strength in it. I mean, it is a characteristic of the market. We must accept it. Maybe currently it is the energy which is substantially driving it. Be that so, but it is the volatility which drives all commodity markets. So are we. So I will not be able to say that quarter to quarter is it a structural change? No, it's not a structural change. That is the inherent characteristic of the market. As regards to the contribution of futures versus options, we got about in futures we got about 62 crores in September quarter, and options we got about 43 crores. That's what it is.
Okay, and the rest of 20 or crores will be from membership fee and other things.
Membership fee, and if you're looking at the consolidated, also it includes clearing corporation part. If you're looking at the standalone, it includes membership and others, and activity charges.
Okay, thank you.
Thank you. The next question is from the line of Nikhil Abhyankar from DAM Capital. Please go ahead. Nikhil Abhyankar, your line is in talk mode. Please go ahead with your question.
Yeah, can you hear me now?
Yes, sir.
Yeah. So, thanks a lot for the opportunity, sir. I would like to go back to the 63 moons contract. So, assuming that we do the same volumes as we did in this quarter, can you just give a rough estimate as to what will be the impact on our EBITDA for the next quarter? And how confident are we?
I will not be able to give those numbers, please. I mean, that is as good as telling me what the commercials are.
Okay. And so how confident are we of going live by end of quarter 3 with the new platform?
Yeah, confidence level is high. God forbid if some unforeseen thing happens, then I think we are on the path to make it live. That's what we are fully determined to make it happen. That's what our all teams are working towards that.
Okay. So my next question is about the higher other income as compared to the last quarter. It is somewhere around 18 crores as compared to 9 crores last quarter. So do you think this level is sustainable going forward? And also we've got a lower tax expense this quarter. So any specific reason for it? And what will be the tax rate for the entire year?
See, we are moving more towards our portfolio in the YTM yield to maturity kind of thing range. So we are moving more to this. Some of them perpetual bonds, some of them into the state development loans of the category 1 kind of states. Gujarat, Maharashtra kind of things we are doing it. So where it is, the returns are very high as compared to what the other money markets or other short-term funds are yielding. So that is having, you see that kind of what you call impact. And if this interest rate yields have started going up in the last quarter, in this or in the current quarter, from sometime June, July onwards it started. So we are accordingly taking advantage of the market.
And the tax rate would be like this. Taxes on, as per the INDAS is on the budget. So it should be on these levels. And once we go live with the CDP project, then we'll also get the benefit of the depreciation, which we have not yet factored that.
Okay. So should we estimate somewhere around 20-22% tax rate?
Yeah, maybe around 23% would be right.
23%. Okay. So I've got just one more question. I was just going through the annual report. So over there, earlier you mentioned that we have got 20% stake in the new spot gold exchange in the GIFT City, but I think it has been reduced to around 14%. Any specific reason for that?
See, the investments are being made in tranches. Sometimes one get delayed, and we got delayed, and we made it up. In the sense, it is that accounting entry. So by 31st March we couldn't make it, but then in the April we have made it. So now currently it is 20%.
Okay, sir. That's all from my side. I'll get back in the queue. Thank you.
Thank you.
Thank you. The next question is from the line of Prayesh Jain from Motilal Oswal Financial Services. Please go ahead.
Yeah, good evening, everyone. First of all, wish everybody a very happy Diwali and happy New Year. And secondly, congratulations on great set of numbers. First question is on the crude oil part, wherein in the previous quarter you had mentioned that the regulator is definitely considering something related to the SGF and margins aspect. So any further developments there?
On the SGF, no further developments because it is still, RMRC meeting in SEBI is yet to take place. Unless that is done, this issue will be kept pending. That's why it is.
Okay. Secondly, on the EGR, BSE has received an approval. What's the status with MCX?
No, you see, that as I told you, we are not comparing with anyone. I think they have gone ahead, let them go ahead. And we have our own assessment of this market, our own assessment of it. As we said, the domestic spot exchanges, gold exchange will start doing better or well only if there is a GST consideration for the first depositor. Now, just to launch and then make that we are the first, it's fine. I have no problem. We are the first or second is not important. Once you launch, we should do successfully. That's what it is. So we will do it once our TCS platform is stable, and once we go live on CDP, then we will focus on the spot.
Okay. So third question is on this TCS thing again. In case if we are not able to implement the TCS platform by December, does the current extension of 63 months allow you to further extend it by another quarter?
We don't know. I don't know because this is hypothetical at this point in time, and we shouldn't be telling. I mean, all alternatives are possible. That's the way I see that. I'm not ruling out anything.
Okay. All right. Thanks. That's all from me.
Thank you. The next question is from the line of Amit Chandra from HDFC Securities. Please go ahead.
Yeah, hello. Yes, sir. Thanks for the opportunity. So my question is on the concentration that is there in the options trading. So 95% is from crude and natural gas. So don't you think that as you have mentioned in the previous question also, don't you think it's a risk wherein other contracts are not picking up, or is it structured by any chance, or is it structured in that way that we are focusing more on these two contracts? And in terms of pipelines, which other
which other contracts are in the pipeline, which we have to launch?
Okay. Is it a risk? Obviously, concentration is a risk. That is true with other leading exchanges where they have only one single product, maybe index options or something like that, and maybe energy exchanges got only the electricity. But that it comes with that structure itself. Investors have accepted that it is like this, and as I told you, volatility drives the market. We have seen last year in 2021-22 also, the gold and silver markets have those products have done exceedingly well, and this time it is doing energy. Sometimes it could be metals also. So I think we are not worried on that. There is no competition. The point is within India there is no competition. Now if somebody wants to trade in these products, they come to the exchange only. I can understand this concentration will be a risk if there is competition.
Okay. And sir, in terms of this, the participants who are trading, so have we seen a substantial increase in the retail participation, especially in options, or is it this, the structure is similar to what there is with futures, or is it substantially different from what it is with futures?
No, see, we have seen a great number of investors participating in terms of trading UCCs. Till this end of this quarter, in this current financial year, we have 374,000 UCCs have participated. As against corresponding period last year, 313,000 UCCs, or 314,000, a little less than 314,000 UCCs last year. And so that's the big number. And if you see Q2 to Q2 comparison, last year, July, September, it was 219,000 total of futures and options. And this year, in Q2, it's a 291,000. So, that's the way it is.
Okay. And sir, my last question is on the technology part. So you mentioned that next month we are going to start the mock trading on the new platform. So it's mostly end of November. So you have only 1 month, which is December, to transition from old to new. So don't you think that 1 month is very less time to do all the testing, and because as you mentioned that we only have 3 months of extension. So beyond that, maybe we have not thought of that, or there is no clarity on that at this point. So your thoughts on that, and also how is the attrition in the internal IT team has been over the last, say, 6 months? Has it gone up? Has it gone up significantly in the last 6 months?
Well, coming back to I said next month, doesn't mean next month end. Okay. So, you are presuming that it is next month end kind of thing, and then only 1 month is available. It could be, in the beginning of the first week of the next month also. So that is the way we are conscious of the time limit. That is why we are trying to make it live as early as possible, and to make it, mock runs also as early as possible. And this is the topmost priority of the management. There's nothing else, let me tell you. And on the second question, that attrition, I think it has tapered off now in the current in this quarter, I would say. But yes, in the previous quarters, it was on the higher side. But now it is tapered off.
Okay. Okay, so thank you and all the best.
Thank you.
Thank you. The next question is from the line of Sumit Arora from Smart Sun Capital. Please go ahead.
Hi, sir. Thank you very much for giving me the opportunity. Sir, if you can just help me understand few things. What's the cash today we have on books? Firstly, secondly, sir, I'm just beg my ignorance, but I'm pretty new to your company, so I just ask you a few things. So, sir, basically, if you can help me understand that, you said the operating revenue was about 60 crore for futures and about 40 for options and 20 was the others. So can you please help me understand that since the options is the new part, so how do you basically see this, evolving? Because normally, options are very well traded all over the world in terms of volume. So how do you basically see this 40 crore kind of options, shaping up? So thirdly, I read somewhere that, SEBI may soon allow FIIs to, start trading, commodities. So has that already been allowed or that has not been allowed as yet, sir?
Okay. I'll take the second question, the third question. How does the options will shape up option revenue? Because currently it is 60 versus 40 kind of thing you're saying it. What I understand is that options are the future for that matter, for all products maybe. We are gradually introducing more and more products, and which one will pick up fast, and then which one will pick up trading as it is currently happening in the crude and NG. And I think it all depends on the volatility and the margining system. And the margins are under the underlying features, the margins are very high, whereas options it is very less. That is the reason why this is why it is darling of the market. And I think as we go along, we will see some kind of traction in other products, and the options will also start picking up. And in the realization rate is also good in the case of options. Even better than what we are keep assuming is that, I keep saying that 1/3 of the options give 1/3 revenue as equivalent to the futures. That's what I say. But that is realization is better than what we have been presuming it. And the third thing is the cash. That is first one. Second, third, right. FI participation. The regulations are out, but still, this is our understanding of it. If they want to participate without any delivery being taken or any kind of such thing, they should be able to participate well in time now itself. But if they want to participate in terms of cash and carry arbitrage opportunities, they want to take advantage of, probably they need a GST registration, etc., which again is a challenging thing for them. And then probably they need to have a custodian also in place if they want to trade in such kind of strategies. Maybe we have to wait and see. But again, as I said, our focus this quarter is not acquisition of more clients. If they come, it's fine. But our focus is on technology, and we want to make it live, come what may, at any cost. The CDP commodity derivatives platform live. That's what our ambition is.
Yeah, and
as regards to the cash, first one.
Yeah, own cash in our books is around 900 crores. This excludes all the margin money and other money that the clearing corporation gets. Our own net worth is 900, which is represented in cash.
Okay, perfect. Okay, and just for one more thing, if I may ask you. May I, sir? May I?
Yeah, please.
Okay, so basically, if you can help please understand that today how many products, are we offering, and, of the revenue, can you give the top 10 products, if by revenue, we offer, and how many more, products or commodities, are we going to introduce going ahead?
No, 2 energy stocks and then 2 of the bullion, that's 4, and then 5 base metals. These are the ones which accounts for the maximum. That's the way it is.
Okay, fine. Okay. Thanks. Thank you so much, sir. And are we introducing more, products or commodities or whatever?
Yes, we are. They are in the pipeline. We will do that. Electricity is one such.
Okay.
Yeah. Thank you.
Okay. Thank you, sir.
Thank you. The next question is from the line of Subramanian Iyer from Morgan Stanley. Please go ahead.
Hi everyone. Thanks for the opportunity and congrats on a good quarter. So I had 3 questions. The first one is that it's more related to the operating revenue breakup. So you mentioned about other revenues being about 20 crores. So if you could give some more color here on what's changing here, because in the first 3 quarters of the last year we had this number around 13 crores odd. The last 2 quarters it's been around 16 crores, and now there's been a good jump to 20 crores. So if you can provide some more color on this, on what's the composition and what's moving here. That's the first question. The second question is about product dynamics. So we are seeing a good pickup in options with respect to crude oil, but we have not seen a pickup in options with respect to gold and silver, which are more dominant in futures, whereas basically crude is not doing that well in futures. So if you can explain some product dynamics here on why this differentiation, and if at all there can be something that can shift from futures to options in the future, from futures to options, why would that happen? And the last question is more about the investment book. So you mentioned that you are moving to YTM investments. Do you have an option of essentially not marking to market instruments that are designated to be held till maturity, so thereby eliminating the volatility in your P&L? So that's the third one that I wanted to understand. Yeah.
Okay. See, the second question I will answer first. Then, you're right that crude oil, thanks to the high margins that have been imposed, then investors found an alternative way of taking advantage of the volatility in the product, so they moved over to the options. And in a similar way, even the NG has also picked up. But that's not true with gold, okay, like that, gold and silver. So the futures only are doing it. Now, my hunch is that it was the high margin costs which have led to this kind of shift. But having got used to that kind of shift, whether they will move back to the futures if the margins are reduced, I'm not too sure about it. I will not be able to predict that. And if there is any other reason that could make them to make them to move over to the futures, I think we have to wait and see on that part of it. Now, the other products, obviously, as we introduce in the gold also, we are planning to introduce a monthly options contract. Probably that will reduce the tenor of the contract also. You need to look at that part of as well. If the tenor is also high and then the contract value itself is also very high, obviously that will keep the participants out. And hopefully, if we make it a monthly contract, that will be brought down by half, Premium will be brought down, so that will make it attractive. So essentially, it is the cost of trading, whether be that premium, be that margins, which will make the people to choose the product. Then the first one, of course, regarding the breakup of it, the other income breakup, we will tell you. The last question again related to the whether HTM. I think that is, we have changed the policy of our investment policy. There we mentioned that all these instruments can be kept under held to maturity.
As we explained in the July call, that we are moving into held to maturity category of investment of bonds. So we are amortizing this over the length of the instrument, and we have invested a substantial amount in state development loans as well as in perpetual bonds, which in primary as well as in the secondary market during this quarter. So all of these instruments are held to maturity. So we will not be capturing any impact of the mark to mark. On the second question with regard to other income, so the other income includes mainly treasury, as well as during the quarter we have informed the market that we have an arrangement with Chittagong Stock Exchange in which we've been providing technical services. So we've been able to we've provided services and we've booked certain income on the services that we have provided to Chittagong Stock Exchange.
Understood. Thanks a lot, and best wishes for future quarters.
Thank you.
Thank you. The next question is from the line of Lavanya Totala from UBS. Please go ahead.
Hi. Thanks for the opportunity, sir, and congratulations on good set of numbers. And I just want to understand continuation to earlier question that in options, is there any difference in participants who trade gold and silver as compared to crude and natural gas? Because there the members are already comfortable with options, but gold is not yet. So is there any difference in the set of participants who trade in different products? And also within crude, do you see higher preference for short duration like 1 month contracts over 2 months because the premium will be lower there?
Yeah, in crude anyway, it's a monthly contract. So as such, the premium will be lower. Okay. And but the contract is also not very big as compared to the gold. Today you have about 50 lakhs of rupees, 1 kg this one. So that's very high. And yes, is there any difference in the participation? There are many common, no doubt about it. But as I told you, for those ones who are day traders or some of them who want to take advantage of volatility, they look at deploying, let's say, 1 lakh rupees in gold and how much money they can make versus deploying the same 1 lakh rupees in crude oil, how much more money or how much more contract they can take and then benefit it. So that is what the comparison they do it. Obviously, the fund requirement will increase when it comes to the gold, and whereas when it comes to the crude oil and natural gas, it is less. So it's pure economics of it, nothing beyond.
Okay, got it. And just for clarification, sir, crude we have only monthly contracts. There's no 2-month contract.
Yeah, there's no bi-monthly contract.
Okay, got it. And can you help me with this revenue split for the last quarter in terms of options, futures, and the membership fees?
Yeah. During this quarter, the September quarter, we earned 64 crores from futures, 43 crores from options.
I mean Q1 last
Q1 was 66 crores in futures, 27 crores in options.
Okay.
Yeah, and then 2 crores would be for the membership, and another 2 crores for connectivity.
Got it. And last thing, sir, after launching after we shift to the new platform, TCS, what would be the timeline that you would be looking at launching the new products, like the monthly gold options which you are looking at? What would be the timeline after shifting to the TCS that you will be launching the new products?
As far as possible, we would like to launch in the first quarter only.
Okay, within
that is within 3 months of the launch. That's right.
Okay, got it. Thank you so much, sir. Thank you so much for the opportunity.
Thank you. The next question is from the line of Anshuman Deb from ICICI Securities. Please go ahead.
Yeah, good evening and thanks for the opportunity. I have 2 questions. One is on the proportion of your UCCs who are using options. You kind of indicated that number. If you can share the penetration of options within your universe as of now, that is one. And secondly, sir, I just wanted to understand that in your contract with TCS, is there any punitive clause of delay or any accountability in terms of from the TCS side in terms of being delayed or something? These are the 2 questions.
Yeah, I think it's already there. There's a penalty clause is there. But every clause has got its own limitations. You can't take away the entire contract value, isn't it? In any contract, you know that. So there is a penalty clause, no doubt about it. Okay. Now this is one part of it. In terms of UCCs, you're asking in futures you have a total of 2,36,000 are getting traded. Okay, 2,36,900 are trading. And in options, about 2,13,000 are trading. Now, the unique between the two are 3,74,000. Is that clear?
Yeah, again, just to be clear that so basically the entire universe who is trading futures is also trading more or less options as well.
Not necessary. That's what I'm saying. You mean we can't draw that number comparison and then deduct it and then you can't that could be a separate set. This could be a separate set. That's why I'm saying 374 is the unique.
Unique. Okay. Okay, sir. I'll sort it out and try to figure it out. No problem. Thank you, sir.
Thank you. The next question is from the line of Parth Agarwal, an individual investor. Please go ahead.
Hi. Thank you for the opportunity and wishing everyone happy Diwali. So I just have a question. Also, in the revenue breakup, there is income from margin money. Just wanted a brief detail about the same line item.
So income from margin money is essentially the cash deposited by them. We earn some interest. That's all it is, and it will be in a money market.
Consolidated, which is managed by MCX CCL, and the investments are made as per the SEBI guidelines. So it's only in liquid, overnight, and fixed deposits.
And what would be the amount right now? The margin amount.
30th September, we had around 1,000 crores in cash.
1,000 crores. Okay. And what is the payment that has been made to 63 months in H1 FY23 so far, basically?
Yeah. H1 will be is obviously as per the previous contract agreement. That was how much?
Around 28 crores.
Okay.
28 crores has been paid. Okay. And what's the top 10 concentration right now?
Sir?
Top 10 concentration by traders.
1 minute.
Volume.
Yeah, I think top 10 accounts for the same like last quarter is 66%.
66%. Okay. Thank you. That's all from my side.
Thank you. The next question is from the line of Rajesh Mehta, an individual investor. Please go ahead.
Yeah, thank you, sir. Sir, my questions are on the technology platform, and two questions. Sir, the first one is on there's a lot of market speculation on the quantum of amount that you pay to 63 modes is maybe multiple times of what our quarterly payout are. And if that is the case, sir, do you think that next quarter's profits would be materially impacted, all things equal? That's the first one. And the second one is on the TCS delivery. Sir, as per the last conference call, if I am right, they were supposed to deliver the entire product suite by end of September, and then only mock testing would have been pending. But they have not yet delivered the entire product suite. So what is the confidence, sir, that they will be able to deliver it by November, and then the testing can go ahead, and then we will be able to launch on 1st January, before 1st January? Thank you.
Okay. The first question, whether, as I said, the charges were exorbitant, whether it will impact the next quarter. I think if other things being equal, obviously it will impact. Now, the other part of it is what is the confidence level? As I said, we are already doing the UAT, and it is progressing, and we are keeping track of it, and day by day we are able to see some good results out of it. And let us see. As I said, these are all options are kept open, and we must make it live. And it is a kind of management commitment, a do or die kind of situation. We would like to make it go live. That is a commitment from all sides. That's the way it is at this point.
Sir, just one follow-up. Sir, in the light of things, would it have been better to have a slightly longer extension than just 3 months? I mean, given that TCS has been at it for 2 years and hasn't yet delivered the product suite for MCX. Just wanted to know your perspective on it.
I think all dimensions were discussed. I think accordingly, this was the best possible extension we could have under these circumstances.
Thanks, sir. Thanks so much.
Thank you. The next question is from the line of Harish Iyer, an individual investor. Please go ahead.
Good afternoon, sir, and happy Diwali to you and your team, sir. Sir, my question is again pertaining to TCS contract. And sir, what we have seen even internationally, when someone replaces the vendor, they run the systems parallelly for a good amount of time so that exchange avoids any failure in the future. I completely get your intention, sir, that you want to move to a new platform. But, sir, doesn't that risk MCX for any future failure, since we will have a very short amount of time to move to a new platform and we don't have running parallelly so far, even for a quarter?
Well, we need to make an assessment, risk versus the expense that we have to incur also. Of course, we will take a careful assessment of the situation as we go along, and how stability, and obviously TCS will be giving L1, L2, L3, all supports they are giving it, and we will be doing a proper assessment, and we will be running the parallel runs also, and depending on the quality of the parallel run, quality of the mock run, we will take this call.
Sir, thanks. And sir, one more question. I understand and what you have said, obviously you cannot appreciate the confidentiality terms and you cannot quote it. But sir, and also considering that you, as you said, you have to measure it risk versus, everything. And if we have to extend this contract, would that mean that the FY23 profitability would materially get impacted? Everything remains same, sir?
We don't know at what price they will extend, or these are all hypothetical questions, isn't it? I do not know what offer they will give. So how am I to say whether it will impact or does not impact?
Okay, thank you, sir.
Thank you. The next question is from the line of Nikhil Abhyankar from DAM Capital. Please go ahead.
Thanks a lot for the opportunity again, sir. So you mentioned that there is a penal clause associated with the TCS contract. So can you just mention the quantum of that contract, quantum of the penalty?
No, I will not be able to. That's what I'm saying. These are all confidential terms. So how can we disclose it? It's not.
Okay, sir. And if at all, if you have any accrued revenue through it, so when will we start booking it?
Come again?
I didn't get it. We didn't get your question.
These penalties, when will we start booking these penalties if there are any?
No, you see, probably instead of paying them, because the payments are not made to TCS as yet. They are all in tranches and depending on the milestones. So as and when milestone is achieved, before releasing that payment, probably we will be deducting it. I don't know. That is, we have to look into the terms of the contract and then accordingly do it.
Okay, that's all from my side. Thank you.
Thank you. The next question is from the line of Sanket Goda from Spark Capital. Please go ahead.
Yeah, thank you for the opportunity, sir. Sir, can you just give us the margin difference in options market in absolute percentage terms in options market versus the futures market for crude, gold? So how and within futures, how the margins are different between crude and the other products? Just to understand how this huge differential is leading to crude volumes to do so well. That's my first question, sir.
Hello. Yeah.
Hello.
You see, in crude oil, for example, futures, the underlying margin is currently about 30-35%. And when the last 5 days delivery comes, every day 5 percentage points it will increase. So 30, 35, 40, 45, 50, 55. It can go up to 55 percentage. Now in gold, currently I think 12% or so. Again, on the last 5 days, delivery period it will increase by another 25%. Now, these are all the features, activities. When it comes to options, the option writer will have a different, obviously the same margins will be applicable for option writer because he is taking exposure to deliver the underlying commodities. So, but whereas option what you call buyer, be that put option or call option, he has only option, so he will pay the premium. Now, how much premium he pay, and it all depends on whether it is in the money, out of the money, or at the money kind of options. That is the way it is.
Got it.
And it varies from product to product.
Got it, sir. Got it. And the second question just wanted to understand is that if I look at historical data, the premium to turnover ratio, if I want to calculate in options market, it used to hover in the range of 1.5% till 21. And this number suddenly has gone up to 2.3 in FY22. Now it is in the range of 2.5, 2.6%. So this I'm trying to understand the risk that this number, if it goes back to 1.4, 1.5 kind of a number, what likely impact it will be, or what is leading to the number to be so high, around 2.5, 2.6 compared to historical past around 1.4, 1.5.
See, if the options are traded far away from out of the money, obviously the premium will be less. If it is closer to the money or in the money or around that, then obviously premium has to be paid more. So, since our transaction charges are based on premium, the premium, if it is high, then obviously our transaction charges will be high. Now, that's where we said in the earlier, some time ago, that we have estimated it to be getting as the revenue of the futures transactions. It is precisely based on that kind of conservative estimate, 1.5%. But we are able to see a better premiums. So obviously our options are more trading at the money, in the money, or near the money, the kind of thing, but not far away from the money. That's the reason.
So you have clearly seen a structural shift among the participants previously when options were not charging. People used to trade far from the month contract, and now they are trading closer to the month contract, and that's like a structural shift, and therefore this number will remain around 2.5 or forever going ahead.
I think it is too hasty for me to make that comment that we have made any structural shift. We have to wait and see. And it is just 1 year old in that sense. The option charging started last year, September, October, and it is too early for me to say anything on that.
Got it, sir. And the like future yield, which is 2.07, so option yield will be closer to 420, 430 rupees, sir?
I didn't understand. Options, we are charging about average 45 rupees for 1 lakh of premium. That is the fee. That
for million. Okay, got it, sir, got it. And last one, the investment book breakup. If you can give how much is in HDLs or held to maturity securities. You said that the cash on investments on the book is around 900 crores. And can you give that breakup of 900 crores into YTM kind of bonds versus last year, and whether there is further more scope to increase it to YTM bonds?
So as I mentioned, total corpus is around 900 crores. We have around 45% in perpetual bond and state development bond, and we also have around 5% in ETFs, which are maturing in April 23, Bharat bond. So the balance is short term, which we are reviewing on a regular basis, and as and when we get opportunities, we are moving it to SDL.
So any cap you have, sir? This 45 can go up to 60 or 70 of the entire cash you hold?
Depend on our liquidity.
Okay, fine. And last one, sir. See, given the mutual funds have started this ETFs, the gold and silver ETFs, have you seen any traction on the exchange because of these ETFs getting launched?
Not as yet. Not as yet.
And what could lead to any increase in the traction, sir? Any reason why it is not picking up?
Well, we are engaging actively with them. There are some structural issues which we have written to the AMFI also to address those issues. They are taking up with SEBI, and probably once they address those issues, probably they will be able to participate greater.
Okay, got it, sir. Thanks it from my side. That's it from my side. Thank you.
Thank you. The next question is from the line of Chirag Maru from Keynote Capital. Please go ahead.
Yeah, thank you for the opportunity. Most of my questions are answered. I just have 2 questions for now. The first one is, could you please tell me what is the ballpark figure that we are spending on the software TCS and how much of that we have already spent? And my second question is, like, we have a particular slabs for future contracts, like up to 350 crores of contract we charge about 175, and beyond 350 crores, beyond 350 crores we charge 175, and up to 350 crores we charge up to 260. So is there any kind of slabs in option contract too?
Yeah. Coming back to the second question first, yes, there is a slab, as I told you. It's about 45 rupees. I mean, 40 rupees and 40 and 50 rupees, and subject to, I mean, how much is the premium? We have that. We have 2 slabs in that. 1 minute, I will get you. And then on the first question is on the pricing. How much is the what you call contract value and other things? I mean, we have been been advised strictly not to disclose any of those numbers, but it will be substantially lower than what we have been incurring so far. That's the way it is.
45 crores, 50. Up to 5 crores, 50, and after that, 30.
Up to 5 crores, it is 50. Up to 5 crores of premium, it is 50 rupees per lakh. And beyond 5 crores of premium, it is 40 rupees. These are the 2 slabs.
Thank you. Thank you, sir.
Thank you. The next question is from the line of Prayesh Jain from Motilal Oswal Financial Services. Please go ahead.
Yeah, hi. Firstly, you had mentioned about launching steel contracts. What is the status? Have the approvals and we are waiting for TCS, or where is it stuck right now?
Yeah, the approval is not in place as yet. That's where we are waiting for. I think we should be able to get that. Let us see.
Okay. And just extending the previous question with regards to the spend on the TCS, if I look at the balance sheet and your intangible asset under development is 75 crores. Is it pertaining to TCS, and is it now how much of or what portion of it would have been paid? So 75 crores is a number that we have it till September.
That's the aggregate amount of what we are spending on our intangible under development. And
that includes the hardware also?
No, only intangible. Okay. But it won't be fair, I mean, we're asking questions, left, right.
In different ways.
In different ways. It needs to be appropriate to mention it.
Okay. Got it. Thank you.
Yeah.
Thank you so much.
Thank you. We'll take one last question from the line of Harish Ayyar, an individual investor. Please go ahead.
So just want to understand what would be we should take as an annualized figure for the other income, considering now we have changed our policy, because otherwise every quarter it moves up and down. So is it possible for you to guide that what of this change in policy and shift of our portfolio, what would be our annualized other income, sir?
It won't be appropriate for me to give you an indication. But, we have, as we have mentioned in the call, we are moving towards wherever we can. Mostly we'll be moving to held to maturity. But remember, in held to maturity, you only going to get the accrual. So that's the downside, right? If the interest rates start falling in the fourth quarter, then there's nothing that we can that we'll be able to record. It will be only the accrual. So that is something that we have to keep in mind.
Okay, okay, sir.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. P.S. Reddy for closing comments.
Thanks to all of you, and I think we have done well in terms of numbers. But my topmost priority at this point, the entire team at MCX is to make the commodity derivatives platform live, and that's what our single most important target for this quarter, and hopefully we will be able to make it. That's it. Thank you. Thanks to all of you.
Thank you. Ladies and gentlemen, on behalf of Multi Commodity Exchange of India Limited, that concludes this conference call. Thank you for joining us. And